We've got that rand trading around the 690 level this morning, so 691 at the moment. Yesterday weakening to 696 at one point. We seem to have come back a bit after that Reserve Bank Monetary Policy Committee statement. Do you think that played a part in the rand's slight recovery?
Morning, Stephen. Well, it most certainly did. The rand was definitely on the back foot yesterday. As you mentioned, it went as far as 696, and that was really sparked by the fact that China hiked bank's reserve ratios again. We saw commodity prices come off as a result, mainly driven by fears of the global economy and that the recovery may not be as strong as hoped. In addition, we also saw the dollar strengthen, benefiting from its safe haven status, and so the rand took quite a knock yesterday, came within a hair's breadth of the psychological 7 rand level, but as you mentioned, managed to hold below that and in fact strengthen after people felt that the MPC statement was more hawkish than previously been anticipated.
Well, what's your view on that? Because we had the Reserve Bank Governor Jill Marcus saying that they are monitoring the second round effects of high energy and food prices, and that the SARB will not fail to act if we do see those starting to feed through. But this is the sort of thing that has been said previously.
You're absolutely right about that, Stephen. It certainly didn't seem to be a more hawkish statement compared to previous comments that have come out of the Reserve Bank. The only real surprise there was that the bank now sees inflation potentially breaching the 6% upper limit in the fourth quarter of this year. So I think that came as a bit of a surprise, because under normal circumstances in an inflation targeting framework, one would expect to see the central bank then respond to a breach of that target limit, but they indicated that at this point demand conditions in the economy as well as core inflation remain quite low, not a cause for concern, and so they don't see an increase in interest rates as being appropriate at this point.
And of course, we do know that the Reserve Bank has a more flexible mandate now anyway, and that it expects a temporary breach of that target. What's your view on interest rates? Have you changed your view on when we're going to see that first increase on the back of yesterday's statement?
No, Stephen, our view is unchanged. We still see interest rates increasing in the first quarter of next year and rising by 200 basis points throughout the year in increments of 50 basis points each. So our view has not been changed by the statement.
We also had some mining data out yesterday. Gold production up 0.6%. Total mineral production, though, negative. That's for the month of March. So not very good news to come out of the mining sector.
Not at all, Stephen. I mean, on a year-on-year as well as month-on-month basis, mining output actually declined. So for the first quarter as a whole, we still think that the mining sector will have contributed positively to GDP, but at a far more modest rate than we saw in the fourth quarter. In the fourth quarter, the mining sector contributed 0.9 percentage points to GDP. So that's likely to have been reduced in the first quarter. And I think that the uncertain and fragile growth outlook for South Africa's GDP for this year is actually one of the main reasons why the Reserve Bank has held off on increasing interest rates. They also mentioned in their statement that unemployment ticked up in the first quarter. So as long as growth remains under pressure, we don't think that the Reserve Bank is going to respond in any way on the rates front.
There's also quite a bit of international data to consider. We had advanced retail sales for April out of the US yesterday, up by 0.5%. Today we're getting US CPI, we're getting European Union growth figures for the first quarter as well. What are you going to be looking for in all that, Nomvuyo?
Well, certainly at this point, the outlook for the global economy is quite important. And in that regard, we also have the first estimate of EU's growth for the first quarter out. So a market consensus expect that the quarter-on-quarter growth rate will have doubled in quarter one from 0.3% to 0.6%. So that will certainly be an important indicator. But also the US data is always going to be important, particularly for the rand, because at this point, we believe that the rand's direction will be dictated by the dollar rate as well as changes in commodity prices. So better than expected data out of the US will certainly be positive for the dollar, and we could see the rand respond to that. We think that if it breaches the 696 level on the upside again, then the next level to look for would be 704.